The screens are still dark when you sit down. Coffee breathes steam. Futures flicker green to red. Discord pings. Your finger hovers, hungry to do something. 5 minutes later, you're in a trade you didn't plan. Hedging a hedge, convincing yourself you're reading the tape. By lunch, you've clicked 20 times, paid more in fees than you care to admit, and the chart that looked like opportunity now looks like a mirror. Here's the truth most traders learn the hard way. You don't have an overtrading problem at noon, you have a pre-market problem at 8:45. Quick note before we build it. This is educational, not financial advice. Use examples, run simulations, and make your own decisions. If mornings have hijacked you before, drop "plan before I click" in the comments so this routine sticks when the bell rings. You're not broken, you're underprepared. We fix overtrading by front-loading decisions, belief before button, so the open cannot yank your identity around. The payoff isn't just fewer trades, it's a calmer mind, cleaner risk, and a day that ends when you decide, not when the market decides for you. 3 quick snapshots to prove it. First, Maya. She came in hot every open, scalping anything that moved. We cut her pre-first hour clicks from 23 to 6 by adding 2 guardrails, no trades in the first 5 minutes, and a 2-trade maximum before 10 o'clock. Same setups, half the attempts. Her equity curve stopped looking like a heart monitor. Lesson: fewer decisions, better decisions. Second, Luis, always average in guy. We gave him a daily risk budget, 2R, then done, and pre-committed entries with invalidation lines drawn the night before. Translation: less negotiating with the market after the open. He didn't become a new person, he became a person with fewer exit doors for bad behaviour. Lesson: planned exits end bargaining. Third, Erin. She chased breakouts on quiet days and faded on trend days. We added a context scan, trend, volatility, breadth, before she placed a single order. She started sizing with volatility instead of her mood. Lesson: context first, size second. 1 sentence to hold in your head. The market punishes spontaneous need, it pays planned patience. Let's turn the mirror toward you and name what we're fixing. Overtrading usually comes from 3 things: heat, elevated arousal; hunger, the need to make it happen now; and context, neglect, ignoring what kind of day it is. You don't remove those with willpower, you root them with routine. 2 terms for today, plain English. R means the money you plan to risk on a trade if the idea fails. Position sizing means how big you trade relative to that planned risk and your account size. Edge means repeatable conditions where your method historically performs. We're going to protect all 3 before the bell. Okay, here is the pre-market routine that fixes overtrading. Think of it as a short film you run the same way, every day. Night before storyboard, 10 minutes. You do this when markets are closed and your brain is less noisy. Pick your A plan and B plan. A plan is, if we open inside yesterday's value, and volume is light, I fade edges. B plan is, if we gap and go with expanding volume, I ride pullbacks. Mark 3 levels that matter. Write 1 sentence for each top setup: trigger, invalidation, and target zone. Then write 1 no-go clause, conditions that look exciting but are not your edge. You wake up the next day with fewer choices, not more. Micro rule: if your setup sentence isn't written, you don't get to trade it tomorrow. Morning body. Reset, 3 minutes. Physiology drives clicks. Stand up. Inhale through your nose for 4. Hold for 2. Exhale for 6, 5 times. Name the emotion out loud. I feel urgent. Or I feel flat. Rate your heat from 0 to 10. If you're above 6, you start the day at half size and with a 1 trade maximum in the first 30 minutes. That is your circuit breaker. Micro rule: size follows state. Hot mind equals half size. Context scan, 5 minutes. Open to the big picture before you open orders. What regime are we in? Trending or bracketed? What's the opening gap relative to yesterday's range? Is pre-market volume expanding or thin? Any scheduled catalysts that can spike spreads? Breath test: are more names strong or weak across your universe? Volatility lens: if the opening 5-minute bar is double your average, You're in a high-energy session that demands smaller size and wider stops. If it's half, you're in patience mode. Fewer attempts, closer stops. Micro rule. Volatility sets size, not conviction. Risk budget, 2 minutes. Decide the day's edge tax up front. Beginners, 2 hour max loss for the day, then you are done. Intermediates, 2.5 hour with a midday review. Pros, 3 hour if and only if weekly drawdown is under control. Write it, circle it. This is your promise not to the market, but to tomorrow's you. Micro rule. A good day you end early keeps you in business for the great day. Execution menu, 5 minutes. You get 2 live plays at the open, not 10. For each, write, if this happens, then I enter. If that happens, then I stand down. For example, if the opening drive breaks the opening range, high on rising volume, and the first pullback holds above the prior high, then I enter on the first higher low. Risk equals 1R below the pullback low. If tick and breadth diverge, stand down and reassess. Or, if we gap into resistance on news and spreads widen, then I do nothing for 20 minutes. You are telling your future self what a yes looks like and what a no looks like. Micro rule. No naked market orders at the open. Patience earns price. First hour protocol. 5 minutes. Give your best brain to the market's most chaotic window. Adopt 1 or 2 rules. Enforce them like a pilot checklist. Options. No trades in the first 5 minutes. 2 trade maximum before 10 o'clock. 1 play per direction before 11. If you hit minus 1.5 hour in the morning, you take a 90-minute break. Walk, water, notebook, no screen. You do not win it back before lunch. Douglas would call this the probability mindset. Behave as if the next trade is one of many, not your last chance. Micro rule. When in doubt, wait for the second mouse. The cheese is on the pullback, not the spike. If this is already lowering your pulse, save this video for your next red morning. Environment design. 2 minutes. Overtrading is often architecture, not character. Hide your real-time P&L. Remove watch lists that tempt you outside your plan. Make the trade ticket take 2 extra clicks. Friction is your friend. Put a sticky note on your monitor with your 3 rules for today. Change your default order size to half. Set a simple timer to stand up every 30 minutes. Micro rule. If your layout invites impulses, change the room, not yourself. Warm-up rehearsal. 2 minutes. Steenbarger teaches mental rehearsal for performance. Close your eyes and run the A plan twice, and the B plan once. Imagine seeing the trigger. Feel your breath slow. Narrate your entry, your stop, your add, your exit. Then imagine the fake out. See yourself not taking it. The point isn't to predict, it's to make discipline familiar. Micro rule. No rehearsal, no risk. Open loop habit. You'll use this all day. It flips over confidence before it flips you. Ask and answer out loud. What would make me wrong fastest? Then draw that line. Touching it is a gift. It pays you in preserved confidence. Schweiger's interviews beat this drum. Survival comes from quick cutting and thoughtful pressing. Micro rule. 1 good loss taken cleanly is a win for your identity. Journal cue card. 1 minute. You don't need a novel. You need a dashboard. 3 numbers. Morning and midday. Arousal. Urge to trade. Clarity, all from 0 to 10. 3 sentences post-trade. Why I took it. How I felt. What I did with size. 1 line end of day. A rule I kept and a rule I broke. You are coaching yourself. Micro rule. Praise 1 clean stop or 1 skipped FOMO trade in 1 sentence. Confidence grows where you reward it. Now let me layer in 4 identity level principles that keep this routine alive when the market starts to sing its siren song. First, boredom is not a bug, it's a moat. Overtrading thrives on the need to feel involved. Many traders fear boredom more than loss and, as one coach joked, get both in sequence. Give your brain a job when you are flat. Annotate levels, label the session type, update your breadth notes. If your hands need to move, let your pen move. Micro rule. Flat is a position. You're paid in clarity. Second, size kills confidence, then kills edge. Big size hides bad process by making small wins feel huge and small mistakes feel catastrophic. Your best self doesn't need drama. It needs repetitions. Adopt a dynamic governor. After any surge of heat, a fast win or loss, you cut to half size for 2 trades. That's not weakness, that's athletic form. Micro rule. After heat, half size. Third, outcomes don't teach as much as execution does. A green trade with sloppy entry and moving stops is a regression disguised as success. A red trade taken at plan is a rep toward mastery. Write process over outcome at the top of your morning page. Douglas again. Thinking in probabilities means you grade how you behaved, not how one coin toss landed. Micro rule. Omaisinamai. Log execution first, P and L last. Fourth, fit beats fads. Your routine should express your edge, not someone else's. If your screen time edge lives in the first 90 minutes, harden your rules there and give the rest of the day to study or life. If your method thrives at the close, your pre-market routine might be mostly do not engage and a midday context check. As Schwager's wizards show, no holy grail, only personal fit with risk humility. Micro rule, trade your time, not the timeline. Let's stitch it together into a single flow you can run tomorrow. Night before, 10 minutes, sketch A and B, mark 3 levels, write 2 setup sentences and 1 no-go. Morning, 3 minutes, breathe, name the emotion, rate your heat, set your size accordingly. Context scan, 5 minutes, regime, gap, volume, breadth, volatility lens. Adjust size to the day, not your feelings. Risk budget, 2 minutes. Today's max loss in R, written and circled. Execution menu, 5 minutes. 2 plays with if-then words, no naked market orders at the open. First hour protocol, 5 minutes. 1 or 2 hard rules. Enforce them with breaks, not bravado. Environment design, 2 minutes. Hide P and L, add friction, set reminders, halve default size. Warm-up rehearsal, 2 minutes. A twice, B once plus 1 fake out you decline. Open loop habit, 10 seconds each trade. What makes me wrong fastest? Draw it. Honor it. Journal cue card. 1 minute now, 1 minute midday, 2 minutes end of day. 3 numbers, 3 sentences, 2 lines of praise. Steenbarger would call this self-coaching. It's not therapy, it's reps. Douglas would call it probability thinking. Risk defined, identity protected. If you want a line for your desk, plan sets me free. Before we close, 3 tiny levers that create big change. 1, the 2-minute timer. Set it for the first 2 minutes after the bell. You are not allowed to click while it counts down. You watch the order book breathe, you map the opening range, and you let the market declare its mood. 2 minutes is a lifetime at the open, and most traps spring in the first 30 seconds. This single pause removes half your simum omeifa, worst trades, to the 20-trade month. Cap total trades to 20 planned attempts for the entire month. That scarcity forces quality. You start asking, does this deserve one of my 20? Overtrading survives on the illusion of infinite opportunities. Put a ceiling on attempts. You'll raise the floor on execution. 3. The accountability snapshot. Send a friend a daily photo of your cue card. Heat, urge, clarity. 1 rule kept, 1 rule broken. No stories, no excuses. A shared glance equals shared discipline. If this routine just calmed your chest, type plan before I click so future you remembers to run it. You don't need more trades tomorrow. You need more standards today. A strong pre-market routine is an identity device. It tells the market who you are before it tells you who to be. Some days you will still feel the heat. Good. That's where the craft lives. Take the good loss cleanly. Praise the skip you would have chased last week. That is how confidence compounds. Next time, we're going deeper on the rule that quietly saves careers. Size kills. Confidence, 3 rules to stop overtrading. If this helped you breathe before the bell, subscribe and meet me there.